Small gap down and a break below the bear channel, but a test of the 60-minute moving average. Small gap usually closes early on, so we'll probably close the gap. On the weekly chart, we fell below last week's high, and therefore we closed the gap up on the weekly chart. This week probably will have a bear body. We have 9 consecutive bull bars, and there's only been one instance in the past 20 years when a streak has lasted more than 9 weeks. So we're at the outer limits of what the market typically does. So at a minimum, this week will probably close below the open of the week, which was yesterday's open. Now, we have a bear channel. Bear channel is a bull flag. Sometimes the channel will last 2 or 3 days, but it's a bull flag. The odds are we're going to get a bull breakout. That does not mean bull trend. It just means we'll break above the top of the bear trend line, and we may have a swing up lasting 2 or 3 hours. So we might get a bull trend today, but at a minimum, I think we'll either break above the trend line today or tomorrow. The bear is trying to keep the gap open. I don't need 2 lines. Let me get rid of. Oh, actually, that's still important. That's the high of last week, so let me put that back. And I'll leave myself a note. And since TradeStation erases my lines all the time, let me write down the price, 94.5. So we'll probably close the gap early on today. Small gaps typically close in the first hour. By gapping down after yesterday gapping up, we have a 1-day island top. But island tops and bottoms are typically minor reversals. My one thought is we've been in a small pullback bull trend for a couple months. Pullbacks are small and they don't last long. 2 bars, 1 bar, 1 bar, 2 bars, 1 bar, 2 bars, 1 bar, 1 bar. So we'll probably try to resume up after a day or two, just like all the prior ones. What's different here is this is the best looking bear bar since beginning of January. So in over 2 months, this is the best looking bear bar, a bear reversal bar closing on its low. Failed breakout of 2,800, which has been major resistance for over a year, and a breakout above one of the lower highs, not all 3. So it did not break above the triple top. All those factors, I think, will attract profit taking from the bulls, and that will probably lead to a couple weeks of sideways to down trading. It could be sideways like this, or it could be down like that, or something in between. Here we were sideways for about a week and a half. So I expect it to fall at least 50 points, maybe 100 points, maybe more. We may come all the way down here. This may sell off for 2 or 3 months, and then this summer, we could sell off until June, and then this summer form a higher low, and then get a second leg up in the second half of the year. But in any case, we're probably starting a transition from a strong bull trend into a pullback. Minimum goal for the pullback, 2 or 3 weeks. There probably, if this is a high 1 buy signal, like all of these other pullbacks, there probably will be sellers above today's high and sellers above yesterday's high. So unlike all these other ones, I think instead of the market just going up after breaking out, I think there'll be sellers above, and the best the bulls will get over the next week or 2 is something like this. Can this be the sort of a collapse? Not likely. When a bull trend looks like this, it usually does not become a bear trend without first going sideways. Last week was small, and therefore this week could be outside down. This is the weekly chart. We're trading above last week's high. We could trade below last week's low. Now, what about a trend from the open, bear trend? It's possible, but not likely. The gap is small, and we're at support, 60-minute moving average. So if we collapse here in the first hour and get a surprise bar down on the 60-minute chart, then we could get down here, today or tomorrow. Remember, last week was small, and we went above last week's high and are reversing down. So it's possible that we have an outside down week. Can the week close above the open? Well, we have 4 days left, and the open is not very far above. So yes, it could be the 10th consecutive week with a bull body on the weekly chart, but not likely. Globex chart, sideways, tight range. Globex low, Globex high. 90% chance we'll go beyond at least one of those two lines today. Is it sell the close bear trend? Trend from the open bear trend? No, it's kind of similar to yesterday where we had that bull bar, but prominent tails, body not big. So sellers above, buyers below. And this looks like the same. Also, this sell-off looks like a bear leg in a trading range, and therefore traders will look to buy low. We're low. And finally, I said we're probably going to close the gap. Small gaps typically close in the first hour, so we're probably going above yesterday's low at some point in the first hour. Test of the 60-minute moving average and bear breakout below bear channel. Both are good for the bulls. Possible low of the day. We should close the gap. So at a minimum, we should go up at least a little bit more. Can you buy above 2? Bear breakout below bear channel. I don't know different ways to draw the channel, but that's certainly one way. Or you can just draw it this way using that low. When you break below bear channel and reverse back into the channel, the target is the top of the channel. So we're probably going above that bear trend line at some point today. But not a great looking buy. A tight bear channel and a bear body on the first bar. Can you sell the one high, a bear body? I would not. I would wait. Bear channel, bull flag. We're trying to get a bear breakout below the bear channel. Bear breakouts below bear channels typically fail. So even though it's a bear bar and not a good buy signal bar, the odds are we're going up. So not a good sell. Limit order bears, will they make money? Probably. But if they take the trade 10 times, will they make money? That's less clear. Right? But any one trade, the odds are you're going to make money. You'll make at least a point, but you're risking, where's your stop? Is your stop up here? So you're risking 6 points to make 1 point. Anytime you risk 6 points to make 1 point, you're probably going to make money on that one trade. But if you do that 10 times, you'll probably lose money. Because if you're risking 6 points to make 1 point, you have to be right better than 90% of the time to make money. And you have to manage your winners really well. And you cannot screw up on your losers. One mess up on a loss and you can quickly erase all of the small wins. 10-minute chart, we're opening down here, closing up here. So 10-minute bulls are getting a decent looking bull bar. Bull breakout below a bear channel, bear breakout reversing up from below a bear channel. 15-minute chart, we have another 7 minutes, 6 minutes to go. Very tight bear channel. Typically will not become a bull trend without first going sideways. So the first rally probably will be minor. You can see limit order bears sell one high, they sell 1 point higher, and they've already made their scalp. For the bears, 2 is a pullback and a bear channel, and therefore it's a low one sell signal bar. But the sell-off is not very strong. We're at the 60-minute moving average. Breakouts below channels typically fail. All of those factors make it a low probability sell below 2. Looks like a trading range open. We were in a trading range pretty much all night, getting close to the Globex high. Remember, 90% chance we either go above the red line or below this red line. low one below 2, low one below 3, but at support, and the sell-off is not strong enough to be selling at the low. So looks like a trading range open, limit order open. Most traders better off waiting. If we do rally, you can argue this is something of a spike down, spike, or the whole thing is a spike on a higher time frame than a parabolic channel. An obvious target would be the top of that channel, which is also above the 2800 big round number, and that has been major resistance for over a year. Who's going to sell below 3? Not many people, right? So therefore, there are probably buyers below 3 and probably buyers on the close of 2. You can see we got right up to yesterday's low at the high of 2. For me, the gap is still open. To close that gap, I want overlap, which I think we will get because small gaps typically close in the first hour. For the bears, a breakout test of yesterday's low, the gap did not close, and a low one sell, but at the 60-minute moving average with a decent bull bar 2, and we're breaking below the bear channel. So not a very good sell below 3. Low one, but a doji bar. I would not take that sell. There are probably more buyers than sellers below 3 and below 2. I should put a marker at last week's low, because this week might go upside down. That's last week's low. No, this is. $64.25. I write the prices in now because TradeStation deletes the lines so often. It's just easier to create new lines if I can, if I know where the prices are. Now, possible trend from the open bear trend, but not likely. We're trying to get a bear breakout below a bear channel. We tried to reverse up below yesterday's low above 1, and you have a better chance if there's a high 2. So if you have a sell-off below yesterday's low and a second reversal up, higher probability that the reversal will be successful. Break below yesterday's low, first reversal up, second reversal, here's the third. Break below yesterday's low, tried to reverse up a second time, buy above the bull bar, bull's got to swing up. Tried to reverse up a first time, tried to reverse up a second time. Tried to reverse up a first time, moving average, big gap down, tried to reverse up once, second reversal, better chance for a swing up. Tried to reverse up once, and then a second time, very strong bear breakout. A lot of bears wanted a micro double bottom. So bulls trying to get a second failed breakout yesterday's low. So 5 is a potential buy signal bar for a swing up. The bulls need a decent bull bar. Targets above the top of the channel and 2800 big round number, and possibly all the way up to the open of the week. I guess I think we'll test the open of the week before the end of the week, but I also think we'll probably get a bear body. For the bulls, the buy is above a bull bar closing near its high, so possibly bar 5. What about on a smaller time frame? Well, I know when I look at this rally, there's probably a buy signal on a smaller time frame, but I'm not going to be flipping around at different charts. Once you start doing that, you have to be doing that when you manage the trade as well, and it's just too much stress, and I don't think it's any more profitable. Bulls trying to get a double bottom, a high 2, failed breakout yesterday's low. The bears will try to get a double top with 1 around the moving average around yesterday's close. Odds are we're going up to the top of the channel. We just don't know the path. Do we go straight up here, or do we go up a little bit and then a new low and then go up? Because the sell-off looks like a bear leg in a trading range, there might be something wrong with bar 5, similar to bar 14 yesterday. Big bar, so bigger risk. Tail on top, so lower probability. But it's still a possible low of the day and a reasonable buy for a swing up if it closes on or near its high. What happens if it has a 3-tick tail, 4-tick tail? A lot of the bulls will wait for one more bar. That's the buy setup. When you get a big buy signal bar like this, a lot of times what happens is it triggers and then pulls back 50% from the top of bar, the current bar. So the bulls, if they buy, their stop is still below 5. They're looking for a double bottom, break above the neckline, measure move up, test of targets above. When you get these big buy signal bars, a lot of times you get the buy signal triggers, and then you get a pullback 50%. Big buy signal bar, it triggers some sellers above, and you pull back around 50%, and then other bulls who did not want to buy above the big bar will buy the 50% pullback. So that's what took place here. Big buy signal bar. Some traders don't like to buy above a big bar because the risk is too big, and they'll buy a 50% pullback. Bears double top, bulls double bottom, breakout mode. You can see some bulls scalped. It went up 7 ticks. It had to go up 6 ticks for the bulls to make 1 point, but it's a reasonable swing buy. We have several magnets above the moving average. Yesterday's low, which is the neckline of the double bottom, yesterday's close, and the top of the channel. Can you sell below 6, a low 2 bear flag and a bear trend? You can. I would not. We're right at support, and we're at the bottom of a bear channel trying to reverse up. Obviously, if it's a bear trend, traders have to sell. But right now, I would not sell below 6. I would wait to see if we break below 4 and then possibly look to sell. What happens if 6 has a 4-tick bear body closing on its low? Then the bears have a sell signal and the bulls have a buy signal, and both are reasonable, and you cannot take both. So you take one or you get out. Bulls would like a bull body at a minimum. Here, they got a bear body here, but then a bull bar, and started to work higher. Similar to today, the bears wanted a double top. The bulls got their breakout. You expect at least a small second leg up, so bull breakout, pause, small second leg up, and then another second leg sideways. Here, sideways for a little bit, and then a swing up. Bull bar, so for the bears it's a low 2, a double top, second failed attempt to get above yesterday's low. but consecutive bull bars, low probability sell. Probably more buyers than sellers below 6. Remember, there are some bulls who did not want to buy above the big bar on 5, and they'll buy either a second buy signal above 8 or 7 or 8, or they'll buy with a limit order about halfway down. So you can see we're right at that 50% pullback. So some of the bulls who did not buy here will buy here. Close the gap, and there were bears who had their stops above yesterday's low, which was also above the 2 high. Bulls able to scalp out 2 points, but will probably go up to the top of the channel. Possible low of the day, so it's possible that we swing up 2,800, big round number, magnet above. Bulls able to take 4 points profit. No sign of a top yet. Okay, there's the first goal, top of the channel. I don't know if it's obvious, but I did buy above 5. I actually took a trade in a little trading account that I have for the room. It's always a distraction because I trade other accounts, and that account, I rarely ever take trades in it because it's hard to do too many things. Surprise bar up, so odds are we'll get at least a small second leg up. Very close to 2,800, big round number. Close to the top of the channel. Take a look at ticks. Ticks are usually not very helpful in the first hour. That was a much bigger problem years ago, 30 years ago, because a lot of stocks did not open at 6:30 Pacific time. You had some guy at a station on the New York Stock Exchange floor, and he might be responsible for 2, 3, 4, 5 different stocks, and he has tons of orders for each one. He can't open all of them at the same time, so he'll open one, take care of those orders, open the other, take care of those orders. And the result is, even though you get 3,000 stocks on the New York Stock Exchange, they all do not begin trading at 6:30. And ticks are still not reliable in the first hour, and I don't understand why, because most of the trading now is electronic. But this is the way the market used to behave 30 years ago, when it was all manual. But in any case, I don't pay attention to ticks until at least 30 minutes, 60 minutes into the day. Remember, we've had lots of pullbacks over the past 2 months, and they've all lasted 1 or 2 days. So the bulls are hoping today will be a buy signal bar. They want it to be a bull bar closing on its high. Now, we're trying to break above the top of the channel. Channel breakouts typically do not get very far. We try to break below, we're trying to break above. So we might pull back here to around the moving average. Can this be the high of the day, a low 2, bar 3? It can be, but I think we'll probably try to, you can see we're right at 2,800, but I think we'll try to get up here and maybe a 50% retracement of yesterday's sell-off. So I think we'll probably go a little bit higher. We also have a lot of time left in the day. Channels typically transition into trading ranges. So we had a swing down, bear leg in a trading range, and we're probably forming a bull leg in a trading range. What do the bulls do? They obviously have an opportunity to get out at 4 points. I think it's reasonable to take part or even all off at 4 points. If 8 is a bear bar closing on or near its low, it's also reasonable to exit below because now we have a low 2, low 1, low 2 at resistance. However, 7 is a surprise bar up. We'll probably get at least a small second leg up. Can it be a bull trap on the open? Absolutely. A lot of times on the open you'll get a strong move and that becomes a reversal. So like a second leg trap, 1 pullback 2. The bears know that, so they're trying to create as good a sell signal bar as they can with bar 8. They want it to close on or near its low to force bulls to give up. The bulls know that the bears are trying to do that, and the bulls will try hard to prevent 8 from being a reasonable sell signal bar because they know a lot of bulls will exit, and that would increase the chances of this being the high of the day. Suppose it ends up as a second leg trap and the high of the day. Well, typically, a strong bar like 7 will have at least a small second leg up, and therefore the bears usually would need a micro double top, even if it's a second leg trap. Broke above the moving average. We're testing the moving average. We're testing yesterday's close. Terrible follow through for the bulls. Reduces the chances of a big bull trend. Remember, bear channel usually transitions into trading range, not bull trend. So even though we have a strong bar 7, this is probably going to lead to a trading range and not a big bull trend. Bulls, they'll try to prevent 9 from trading below 8, and so they might buy the close of 9. But if they're unable to prevent the bar from closing on its low, and if they're unable to prevent 9 from going below 8, a lot of the bulls will get up. And for the bears, second leg trap, I would not take the short, even though it's a possible high of the day. I would wait to see if we get 2 big bear bars or 3 medium bear bars. Bears trying to duplicate yesterday. Buy climax, high of the day. Buy climax, high of the day. Possible high of the day. I would wait for a second entry short or for a series of bear bars to sell. And for the bulls, it's a problem bar. So a lot of the bulls, they get out during 8. Others will get out below 8. But I still think we're always in long. And I still think we'll probably get a micro double top. I just got out of the little long in the trading account at 4 points, the limit order right there. I think it's okay to hold long, but I don't like 8 plus if I have 4 points on a trade, it's okay to exit. For the bulls, it's a 50% pullback. Hard to see, but that's what we're doing today. We have a rally here to the high of bar 7, 50% pullback. And then up here, we have a rally from the low of 7 up to the high of 8 and a 50% pullback here. For the bulls, a high 1 above 9, probably always, clearly always in long. But with that big bear bar 8, a lot of the bulls will hesitate to buy above 9. They'll wait for a second buy. Do I think we're going higher? Yes, I think we're going up here. I don't know if you noticed in those reversals up from below yesterday's low, the second reversal's up on the high twos. Sometimes you get a big bull trend, but a lot of times all you do is get a swing up. This is like today, bull bar, disappointment, and then second leg up. And the market was sideways for the rest of the day. So we don't necessarily have to expect a big bull trend. I do not expect a big bull trend. Another two legs up, one pullback, two, and a little bit higher, and then trading range. Odds are today is going to be a trading range. Yesterday, bear channel, bull flag, so you expect a bull breakout. We have the bull breakout above the top of the channel, and then a transition into a trading range. So this is probably a bull leg in the trading range. We're beyond a measured move up from this little bubble bottom. Okay, we hit the measured move target. We hit the top of the channel. We hit 2,800. Bears micro double top, 7, 9. Decent sell signal bar, 8, but probably buyers below. We're probably going to get back above 2,800 and probably get up to this top of this parabolic channel. Not a good looking high one buy signal bar, and not a good looking sell below 8. So therefore might be sellers above 9 and buyers below 8. The high one, but what happened? You see what happened there? You had enthusiastic bulls who bought the 7 close, right? Some of them bought above 7, and they were so disappointed by 8, they placed limit orders to get out break even. So a lot of the selling that took place at the high of 10 was from disappointed bulls desperate to get out break even. It got to their entry price at the close of 7, and they sold, and that caused that reversal down. Remember, 7 surprise bar up, second leg sideways to up likely, and 10 qualifies. It's a second leg sideways to up, so it's the minimum objective. For the bears, it's a micro double top, a second leg trap, possible high of the day, but I would wait to sell. It's a impressive reversal up on 7. It's one of those dominant feature type bars. When you get something you look at and say, that doesn't look like it belongs on this chart. It's a dominant feature, and typically that controls the rest of the day. So right now, I would say maybe 30% chance we'll get our new low of the day, 70% chance we'll either stay in a trading range or have a bull trend. I don't think we're going to get a bull trend, and that means I think we'll probably be mostly sideways for the rest of the day. I don't know if I have dominant features in this month or next month. Yeah, I added a section on dominant features in February, so it's not in the list of things to, right now. But Richard will update the examples this weekend, and there will be a section on dominant features. When you get something that's so unusual that it dominates the rest of the day, the market will have a hard time undoing it. So in other words, the market will have a hard time going below the low of the day. Bulls looking for a second buy signal, and the bears, they have a micro double top, but we're right above the moving average, and we have that dominant, unusual surprise bar 7. So odds are we've seen the low of the day. What happens if we break below 5? Sometimes when you get a really strong reversal up, you'll get a sell-off, bull flag. It just keeps going down, down, down. It even goes below the bottom of the bull flag, yet there are buyers below. So you can get a bull flag that pulls back to below the bottom of the bull trend. Very strong breakout, big sell-off, but this is probably a bull flag from this bull trend. Let's see if I have it over here. Yeah. Very strong rally. and we got a sell-off to a new low. You can argue that the bulls needed a double bottom, but you could also argue that this sell-off is not particularly strong. The bars are not big. It could simply be a bull flag that pulled back below the bottom of the bull trend. Same thing here, dominant feature, new low of the day, but this whole thing could be simply a bull flag from this bull trend. Another one here, here. This whole thing could be a bull flag. This whole thing could be a bull flag, even though it lasted for hours. Dominant feature, new low, but bulls bought below that low. Same thing, strong reversal up, new low. This whole thing is a bull flag, even though it fell below the bottom of the bull trend. Same thing, dominant feature, new low, bulls bought below. Still always in long, not very good looking buy signal bar, 9 or 10. We're getting late in the hour. The bull's trying to create a good buy signal bar, 60-minute chart. We have a 7-bar bear micro channel. Not good for the bulls. Increases the chances that if we reverse up, we'll get a trading range instead of a resumption of the bull trend, which is what I think we're going to get. I think we're going to go sideways. Traders, bull trend always in long. They sold above 9, they sold above 10. So even with that strong bar 7, bears are willing to sell and bulls are not aggressively buying. Might get a third push up to a wedge, 1, pullback, 2, pullback, and then 3. Still has not gone below a bear bar, so a lot of the bulls are still holding long. And even if it goes below 8, there probably will be buyers not far below, like around yesterday's low and this double top. Not good stop entry trading. 5-bar or now 6-bar tight trading range. This is the final bar of the hour. The bulls want the 60-minute bar to have a strong bull bar first hour. So they want bar 12 to close near the top of the day's range. And the bears want a weak buy signal bar on the 60-minute chart. So they'll try to get bar 12 to close far below the 8 high. You can see not a lot of traders willing to buy up here. For the bears, you can call it a parabolic wedge, 2, 8, and 12. But you're selling at the bottom of a 6-bar tight trading range, just above the moving average, and after a pretty good bull bar 7, so not a very good stop entry market. Remember, the bears are trying to weaken the 60-minute buy signal bar. What do the bulls do? I would get out below a bear bar that closes near its low. Might be bar 12, maybe bar 8. I still think there'll be buyers below. 6-bar tight trading range, so sellers above, buyers below. Obviously, if this is the high of the day, the bears have to sell at some point. I would wait for 2 or 3 consecutive bear bars and then think about it. We're right at a whole bunch of magnets. Last week's high, the 60-minute moving average, yesterday's low, the bear trend line, 2,800. So there's a bunch of stuff going on here. The triple top on the daily chart, there's a whole bunch of stuff going on here that will probably keep the market from getting very far away. This is a credible sell, possible high of the day for a parabolic wedge, 2, 8, not really a parabolic wedge, but a wedge. However, it's a tight trading range, and we have a surprise bar 7, so that lowers the probability for bears selling below 12. For the bulls, a high 2 bull flag, so a higher probability buy than above 9, but middle of a tight trading range, so not particularly strong buy setup. What about the bears who sold below 12? I would not have taken that short. If you take that short, your stop is still probably above 12. I don't know, I still think we're always in long. Bull's trying to get a credible buy signal bar here. This is similar to what we had a couple of days ago at the close. What do you do? Well, if you're trading always in long and you get out below 12, theoretically you buy above 13 or above 12. A couple of days ago, we had a similar thing with a decent sell signal bar, and it immediately reversed on the next bar. I talked about that at the end of the day, saying that I would not take that short. I don't remember where it was. I don't think it was that long ago. Yeah, here. Was this it? Yeah, I think this may have been. Well, I don't even know if that's it. You got to sell and then buy. What do you do? Best, when in doubt, just stay out. I'm not finding what I was looking for. It may have been longer ago than what I thought. Another example, strong rally and a second sell. If it's not a great short. If you get out of longs, you have to buy again. Not a great looking buy tail, but there's a better buy. Oh, right here. This is what I was talking about. We had a rally into the close, and bears were hoping for a lower high and a test back to the open of the day. They have a decent sell signal bar, but pretty tight bull channel, so low probability sell. The bulls immediately got a buy signal bar on the next bar. So you got a sell signal bar here and a buy signal bar there. What do you do? The math is not all that good for either. We're probably always in long. Very tight channel. I would not take the sell. Theoretically, you'd either buy above 77, the bull bar, or above 76 if you're trading always in long. We're still always in long. Reasonable to get out below that bear bar or this bear bar. But if you're trying to stay in the market, you'd buy again either above this bull bar or above the top of the swing, which is 76. Bulls did not trigger the buy above 13 and did not trigger the buy above the 60-minute bar. That sell-off on bar 12 put a tail on the top of the 60-minute bar, making it a lower probability buy signal. And for the bears, we still have a wedge, 2, 8, and 12. Even though it does not look like a wedge, the wedge triggered bar 12. So we're on a swing sell. It's just a low probability bet. But sometimes on the open, wedges just don't look right, but they're still wedges. So gap down and a rally in a wedge shape. A lot of times they don't look like wedges, but still a wedge, and you can get a swing down from it, even if the original rally was pretty strong. This is kind of like today. Pretty good rally, not wedge shape, but it's still 3 reversals down, 1, 2, 3, and you sell below a bear bar. And this is the bear bar 12. Breakout mode, right? For the bears, it's a short below 12 for the wedge, but I think 7 is such a dominant bar. We're still always in long, and we're probably going higher. 60-minute chart, a pullback to the moving average, a decent bull body. We probably have to get above the first hour's high. We probably have to get above that bar, which means we probably are going above the 12 high. Bulls now, micro double bottom, 13, 14, still a buy above 13. Tight trading range. breakout mode limit order market. So here the bulls have a high 1 bar 9 and traders sold above it, and the bears have a second sell signal, a micro double top below 12, closing on its low, and the bulls bought it. So limit order market. Swing sell below 12, still on a swing buy above 5, but I think most bulls would get out below 12 or below 8. The double top 2-6 magnet, that's a breakout point. Yesterday's low, same price, breakout point. Last week's high, a magnet. So we got magnets below. It would be better for the bulls, I think, if we go down and reverse up strongly from yesterday's low, the double top, 60-minute moving average. Looks like we're going to trigger the buy above 13, and we're probably then going above 12 to trigger the buy on the 60-minute chart. But I think the odds are this is not going to be a big bull trend day. You know, we may get up here, the top of this channel. Might be more sellers than buyers above 14. It's a bull bar, it's a bear bar, and we're in a tight trading range. Just like 12, a good-looking bear bar, and there were more buyers below it than sellers. 2,800, a very important price for over a year. The sell for the bears, but you can call it a triangle, limit order market. Not good stop entry trading. I still think it's slightly more bullish than bearish. We have a dominant feature here. Did the seller close yet? The bears probably need one more bar. You can see the bulls giving up. We're down to the target zone, the double top, and last week's high. I sold late and scalped. I debated selling below 15, did not, and ended up selling during 16. What happens if we go to a new low of the day? I still think today is going to be a trading range day, and therefore I suspect if we do go below 5, there probably will be buyers not far below. Are we always in short? Probably, if 17 closes near its low. We're testing the buy climax low, the 7 low, 60-minute moving average, yesterday's low, high of last week. Will most bears scalp? Probably. Wedge 12, expect at least 2 legs sideways to down. So 13, 17. So 17 meets the minimum objective. The Globex range was small. We broke above it, and therefore we could break below it as well. Looks like a parabolic exhaustion breakout of a bull channel, bull breakout above a bull channel. Can you sell the close? Betting that we'll break below the 18 bar range. This is bar 17. So the bottom of the 18 bar range is here. The top of it is there. It's possible bar 18 could break below the low of the day, but then instead of breaking below bar 18, we could reverse up. This is undoing bar 7. A buy climax 7. There's always a magnet at its low, and that's where we are now. Bulls will want a double bottom, and the bears will want a continued move down. If it's going to be a big bear trend, there'll be many opportunities to sell. I still think trading range is more likely. I sold, I scalped out. Is it a strong enough bar to be selling again? I think it's big down, big up, big confusion trading range. And this is the bottom half of the developing range. And we're at the 60-minute moving average. So right now I'm trapped out. I do not want to sell here. And there's nothing to buy. So I got to wait for more information. This is bar 18. By the close of bar 18, in general, 90% chance we've seen either the high or low of the day. For the bulls, they want a major trend reversal. So bear trend, bull breakout, high or low, major trend reversal. But for bear bars, most bulls are not going to buy above 18. If 18 is a huge bull bar, yes, they'll buy. But if it's not a huge bull bar, they'll wait for at least a micro double bottom. And for the bears, does it sell the close? Well, we got 4 bear bars and a tail at support. I think we're always in short, but not a good location to sell the close. Bulls, bears trying to break below the low of the day. But like I showed in those examples, sometimes you get when you have an extreme, sometimes you get a breakout to new low and then a reversal up. You have a pretty good surprise bar up, dominant feature type bar. A lot of times there'll be buyers not far below. The way I look at it is the bulls trying to reverse, failed, they're trying again. A lot of times the market makes 2 attempts. Yesterday's high did that. Tried to reverse down here, and then we got a second reversal here. On the Globex chart, we had that yesterday. We had 3 consecutive outside bars, possible high of the day. The bulls got 1 more leg up, and then the bears got another reversal. Bulls, high or low, major trend reversal, but too many bear bars, 4 or 5 bear bars. Most bulls will not buy above 18. And for the bears, what do? I think it's reasonable to get up above any bull bar. And does it sell the close? It is, but we're at the low of the day, and we have a dominant feature today, bar 7. And I think that increases the chances that there'll be buyers even below bar 5. Bar 18, an important bar. Yesterday, here's bar 18. We had a pretty good rally up to bar 18. We broke above the 18 bar range on 20 and reversed down for the rest of the day. So here we're breaking below the 18 bar range, and the bulls want to get a reversal up. They want the opposite of this, buy climax, failed breakout of the 18 bar range, and then a bear trend. And today the bulls are hoping that it's a bear breakout below the 18 bar range, a sell climax, and low of the day. Remember, dominant feature, bar 7, increases the chances that there are buyers below 7. Dominant feature, very often there'll be buyers not far below, and the bulls will try again to get a reversal up. Dominant feature, big sell-off, buyers below. Not a great buy above that doji, micro level bottom, good. Higher probability, wait for bull bars closing near their highs. Lots of examples of dominant features where you get a new low, even with a strong sell-off, and it ends up as the low of the day. For the bulls, lower low, major trend reversal. Support, 60-minute moving average. 60-minute chart. This is now an 8-bar bear microchannel. Pretty good bull bar. You'd expect buyers below that 60-minute low, which is what we're getting here. So what do you do with 19 if it closes on its high? Lower low, major trend reversal. Sell climax. But 4 pretty good bear bars. Probably first reversal up is minor. So you don't have to buy. Probably here. First reversal up after a tight channel, probably minor. The bulls probably need a double bottom or some kind of a major trend reversal before they can get a bull trend. Here, they did not get a bull trend, but that first leg up was unlikely to become a bull trend. Here, it's a double bottom. We went up and down and up a second time. We do not have that today. Here, we're at this point, and the bulls probably need some kind of a micro double bottom. Sometimes you get just an abrupt reversal, but after that much selling, the reversal is usually minor, and the bulls usually need a test of that low and some kind of a double bottom. Here, a higher low, I call it a higher low double bottom, higher low major trend reversal. So if we do reverse up here, after this much selling, it probably will be a minor reversal, maybe up to the moving average. I would get out of shorts above a bull bar, especially a bull bar closing on its high. Normally with 5 bear bars, you're not going to buy above a bull bar 19, but this is different. This is the bottom of a trading range at support, 60-minute moving average. So I'm not opposed to buying above 19, but the 5 bear bars, 4 of them closing on their lows, I typically do not buy with a stop above 19. I wait for a micro double bottom. When it's strongly down, I usually wait for a second buy, first buy, second buy, or for 3 or 4 bull bars and then start to buy. Problem for the bears. All right, we're at support, 60-minute moving average, and failed breakout low of the day. Failed breakout 18-bar range. If you're a sell to close bear 18, what are you thinking? You're thinking, uh-oh, this could be a double bottom, and it could be the low of the day. I hope it comes down to that 18 close so I can get out, break even. And therefore, there probably are buyers around that 18 close. Desperate bears trying to avoid a loss, thinking, darn, I sold the low of the day, and it's probably going to be a trading range day. For the bulls, I would wait for a second buy signal. And for the bears, would they sell 19 high because of that tail? I would get out of shorts at the market. You know, the odds are it's a trading range day. And certainly would get out above the bull bar, 19. Are we back to always in long? Probably, right? A decent pair of bull bars. That dominant feature 7, usually is enough to prevent the day from becoming a bear day, and that leaves us with either a bull day or a trading range day. What about the minor reversal up? This is probably a minor reversal up, so we'll probably get some kind of a test down. Big bull bar at the moving average. So you'll have bears selling the close of 20. You also have the sell the close bears 18 disappointed by 1920 scaling in. I would not do either because we have a dominant feature which reduces the chances of a bear trend, and we have a failed breakout of the 18 bar range. This could still be a pullback from the breakout below the 18 bar low, but this is a pretty good reversal up, so not very good for the bears. Well, the bulls double bottom, and they want to break out above the neckline. Can a minor reversal actually become a major reversal? Absolutely. In general, maybe 30% of the time, a minor reversal ends up major. Who's going to sell below 21? Probably nobody. You can see we're oscillating around. I said we have all these magnets here. Yesterday's low, yesterday's close, the high of last week, 60-minute moving average, and right now trading range around all of those prices. I think back to always in long right now. But anybody buying here, stop below 19. We broke below the 18 bar range. We have not broken above the 18 bar range, although the momentum up is good enough so that we probably will. And the 60-minute chart, we're getting a lot of bars in the micro channel, yet we're still getting a higher low and a test of the moving average. So we're probably going above the 60-minute high, above the high of the first hour or the high of the current hour. Top of the tight trading range, so we might get some profit taking here, but a very good reversal for the bulls. We've probably seen the low of the day, even though we've broken below the 18 bar range and we have not broken above the top of the 18 bar range. The odds are we're going to break above the top. Can this be a failed breakout above the top of the range? Probably not. Right now, only 10% chance we're going to get a new low of the day. So that leaves us with either a bull trend or a trading range day. Big enough surprise up, you'll get desperate bears. You have sell the close bears 18, bears who sold the new low of the day, and some of them sold more higher. They're desperate to buy back shorts. And consequently, we're probably not going to go down all that far because the bears they're trying to minimize their loss. They're trying to buy back their shorts. And you have bulls who either bought and scalped out or who did not buy, and they're eager to buy as well. So you got both bulls and bears looking to buy. If the bulls are lucky, we'll come back to around the moving average, a 50% pullback. I don't know that we will, but that's what the bulls are hoping to see. Bears want failed breakout above the 18 bar range, but the rally is so strong, odds are the bears will need at least a micro double top, and right now only 10% chance they'll get a new low of the day. So bulls are buying for any reason, they'll buy a pullback. Stop for the bulls right now is far, so anybody buying for any reason, stop is down here. Those bulls are not going to let their stop get hit, but that's where they put their initial stop. For the bears, it's not really a good looking expanding triangle, but we went up, down, more down, more up. So expanding triangle top, but bears will want a micro double top. Also, we've probably seen the low of the day. So buyers somewhere below. I don't know if they'll buy the 23 low or a 50% pullback, but buyers somewhere between here and here. Any reason to sell? Limit order bears might sell 12 high, 1 point higher, 2 points higher, but I would rather look to buy a pullback than sell a rally. Bulls start scaling in 22 low, or they'll wait for a deeper pullback, maybe to around the moving average. And for the bears, can they sell below 23? Expanding triangle to 12. I would not. I would wait for a micro double top before looking to sell. Is it a big enough pullback 23 to create a lot of confusion? Not really, right? We may get a couple small legs down, we may get a wedge bull flag, but we're probably always in long. We clearly are always in long. And there'll be buyers either here or lower, despite the expanding triangle. The big reversal down creates confusion, and it increases the chances that we might get 2 or 3 legs down. So 1, pullback 2, pullback 3. Despite the strong rally, bears made money selling the breakout above 12. Just like despite the strong sell-off, bulls made money buying the breakout below 4. High 1, but big enough bear bar 23. We might get a couple legs sideways to down. So traders buying above 24, probably not good to put stop below 24. You probably still need a stop down here, but you're not going to let it get filled. Let's look at ticks. Okay, we got a tick reading here, fairly extreme, above 700. So we're probably going to get a new high of the day, or at least a test of this high. I don't know if it's coming now or if we have to go down a little bit more. We have a buy climax here, so we may have to come down to this buy climax low first. Some bulls bought 22 low and 1 point lower. Other bulls simply bought 1 point lower, and it got back above that 22 low. So the bull scalpers, limit order bulls, made their money. Stop order bulls above 24. I think you need a wide stop. Sometimes you get these buy the close markets and you pull back for 2 or 3 hours, and then later in the day you come back to that high close. So sometimes you get big rally, very deep pullback, and then later in the day you come all the way back up there. Buy the close rally, and then it just reversed down, and it took several hours to get back there. But if you have a buy the close rally and no chance to get out break even, it immediately goes down. 80% chance you're going to be able to avoid a loss if you buy more above a bull bar lower. You'll either get back to the midpoint, avoid a loss, or you'll get back to the original price. You can get out break even on your first buy and with a profit on your lower buy. I did the limit order buy, not the stop order buy. Strong rally, likely to get a second leg sideways to up. Limit order bears made money selling above 12, and therefore they might sell above 22. I would not. Usually, if a bull trend is strong, I prefer only to buy until you start to see more evidence of strong bears. Limit order bears, you can see they sold, or they are selling 22 high, because they know, as strong as this rally was, they made money selling 12 high. Last hour outside up on the 60-minute chart, and therefore it's a 60-minute buy signal bar, and we just went above it and triggered the buy. But 7-bar bear micro channel, probably a minor reversal. You can see the limit order bears 22 made money, and now the stop order bears have a micro double top, a second failed breakout above the 12 high. But to sell below 25, I think most bears are not going to use a stop order sell. The reason I brought up this possibility is I think today's going to have a lot of trading range trading, and therefore I suspect we may pull back deeply here. I would get out of longs below 25 if it has a bear body. And for the bears, if it has a 3 or 4 tick bear body, bears will probably sell, but it's one of those high probability, bad risk reward trades. It's probably not going to lead to a bear trend, but it might drop for a point or two. So you're risking more than what you're hoping to gain. You need high probability. Can you buy the low of 25? I would not. We went down, we went up, we went down, we went up. Trading range behavior. And now we're getting a second reversal at the high of the day. So I would get out of longs. Bears might sell if it's a good looking bear bar. I would not buy the 25 low. So you get a high 2 with 24. But right now I think the bears are on a sell 25. And I think they'll probably make money, even though right now it's a 5 tick trap. And that lowers the probability of bulls buying above 26. I would not take that buy. I think we're going to pull back more, maybe to the moving average, maybe even a 50% pullback. I think we might be doing this for the next couple of hours. I don't think we'll get that or that. Well, we could, well, even that, I don't think we'll get that. But we could do this deep pullback. Or this. Today's rally is much stronger than that. Here, second entry sell, deep pullback. So possibly we could do that. I suspect trading range by the close trading range. Strong rally, deep pullback, and then sideways for several hours, and then a test back up to the high of the day. It's possible that we can just keep going up, but second failed reversal and expanding triangle, 60-minute chart, 7-bar bear micro channel, probably first reversal up, not all that far. Yesterday, bear channel usually converts into a trading range, not a bull trend. I said we might get up to that 58 high, and I do think we'll try to get to the open of the week at some point this week. And I think the week will close below the open of the week. Small chance right now would be we can get an outside down week on the weekly chart. Go below last week's low. I don't know if you remember, I mentioned that the other week we had a day that opened on the low of the week, and I said that's extremely unusual, and right here. And I said TradeStation data is sampled, it's not every tick, and the CME data is accurate. And I showed the CME chart, which showed that, in fact, there was a 1-tick tail on the bottom of this bar. I just got a note from TradeStation saying that their open is not the actual CME open. And it says the symbols are constructed internally. It says the day session data are proprietary TradeStation products and not expected to reflect the CME prices. And also in their email, they said that the CME, apparently there's a time and sales for the CME. The table of data is different from the CME chart. So they're saying that CME has an inconsistency. They're saying the CME chart has one price, a low below the open, but the actual data on the CME, if you look at tick by tick, the low is at the open. I don't know if it's true. It's not worth my time to check. But two things I learned from that. One is that TradeStations says its day session futures data is not reflective of actual CME prices, that they created internally. So they have an algorithm that calculates where they think the open, high, low, and close should be. So they're saying these prices are not necessarily exactly the same as the CME prices. The CME prices are the actual ones. The CME owns the E-mini, so they get to say what the prices are. And then also they're saying that the charts on the CME website are not necessarily accurate, that there's an inconsistency between the chart and the actual data. So both of those facts are interesting. All right, so we're around the moving average, we're around the 8 low, we're around the 50% pullback. So this is all a buy zone. 50% pullback from that, but not a 50% pullback from this. It might be that this is the bull trend and that this is part of the pullback. So pullback and then a higher high, but still part of the pullback. And then this would be 50%. So 25 might be an outlier. This might be the bull trend. And then 24, 25 might be part of the pullback, even though the pullback went above the top of the bull trend. Just like this pullback went below the bottom of this bull trend. We're in the buy zone. So the bulls, double bottom 24, pull back to the moving average, 50% pullback, but pretty remarkable sell-off down to the 27 low. And that will stop a lot of bulls from buying above 27. They'll wait for it to stop going down. So they'll wait for it to go sideways for a few bars before doing stop entry buys. They'll do limit order buys. They'll buy the 26 bear close, they'll buy 1 point lower, right? They'll buy the 26 low, they'll buy 1 point lower. But stop order buy, they'll wait for it to go sideways for a few bars. And for the bears, is it sell the close? I would not. They'll sell rallies, they'll sell above 27 probably, but I would not sell closes. This is probably, down and up and down and up and now down, confusion, trading range, and we're pretty much right in the middle. As I said, I think the 50% pullback is based upon this. I think this is the bull trend, and this, even though it's a new high, is not part of the bull trend. It's part of the pullback from 22. So I think we're going to go a little bit lower. High 2, pullback to the moving average, but surprisingly big pullback and probably limit order market. So probably more limit order bears selling 27 high, 1 or 2 points higher than stop order bulls buying. Decent bull bar, still always in long, but I would rather take a second stop entry buy, not the first one. More limit order trading than stop order trading. For the bears, they have a lower high, and they're looking for a second leg down. You can argue expanding triangle top, 1, 2, 3, or 1, 2, 3. But more limit order trading, selling above 27 and scaling in higher. And probably buyers not far below 25, maybe around yesterday's low in the 60-minute moving average. Breakout test, 24, 25 low. Very often when you get a sell signal, the market comes back up and tests that sell signal. Someone asked a question about that the other day. Over here, sell signal, and we got to within a couple ticks of it, and despite 3 bull bars, the market sold off. If we do go up higher, it'll probably be a bigger expanding triangle, 1, 2, 3. Remember, I think today is going to have a hard time going much above this high, so I think today is a trading range day. It's unlikely we're going to a new low, but we may not have seen the high. I suspect that we're going to go higher by the end, at some point later in the day. Right now, it looks like we might get another leg down, one, pullback, two. Always in bulls, they get out below 25. They can buy above 28. I would not. I would wait for a second buy signal. Alternatively, they buy above 25, but I don't think that's very good either because bears are making money selling above things, selling above 8, selling above 12, selling above 22, and probably selling above 25. So bulls, they're stuck with limit order buys like the 24 low or the 26 close, or wait for a second buy signal, a double bottom 27. I think we're going at least a little bit lower. I think we'll get down to the 50% pullback using 22 as the top of the bull trend. So the bulls, a second buy signal 31 at the moving average, but tight trading range, probably more limit order buying. And you got 3 or 4 good bear bars, 23, 25, 26, 30. I would rather have it go below 27 and then reverse up, then maybe wedge bull flag, 3 legs down, 1 pullback, 2 pullback, 3. Otherwise, I think it's more limit order buying below 29, maybe, probably buying below 27, buying at the 50% pullback. And for the bears, they sold the 27 high. I sold the 27 high. Will they sell the 31 high? I would not. Right now, I would look to buy somewhere below 27, maybe around a 50% pullback. And if the bulls are lucky, they'll get a buy signal bar, like 24. So 3 legs down, 1 pullback, 2 pullback, 3. As I said, I think this is what we're doing, pulling back and sideways for 2 or 3 hours, and then the bulls will try to get trend resumption up later in the day. Where did all the enthusiastic buyers go? I think we're beginning a correction, a pullback on the daily chart, weekly chart. Even if we get a decent high one buy signal bar today, I think there'll be sellers above yesterday's high. And as I said, we might do this for 5 or 10 days, but I think we're going to go lower. I think in the next month or two, we'll probably come down to this low, at least to this breakout point. So, I think the upside from here is limited. I don't think we're going to strongly break above the triple top without at least some kind of a pullback first, like to that high or this low. Down to the buy zone, testing yesterday's low, and 3 legs down, 24, 27. Need a decent buy signal bar, 33. Tight enough bear channel. Even if the bulls get a good buy signal bar, first leg up is probably going to have a hard time getting above 30. So we're probably in a trading range looking for the bottom. The bottom probably is around where we are, and the top is probably around the 30 high. If you buy above 33, where's your stop? Can you put it below 33? In a trading range day like this, where things are not all that clear, you could put it below 33, but I still think you might need it below below 19, because we may get a third push down, and maybe 1 pullback, 2 pullback, 3. We still have room to the 60-minute moving average and to yesterday's low. Can the bears sell 33 high? I would not. We're too low in the range. We're in the buy zone, and we have a wedge bull flag. Not a good buy signal bar. Yes, it's still a wedge bull flag, 24, 27. And yes, I think we're going to go up to the 30 high, but we may go down a little bit more first. We still have magnets below. So confusion, one of the hallmarks of a trading range. And a lot of traders, if they trade it, use wide stops and scale in and hope for second entry buys and sells. Here's a second entry sell. Probably a minor reversal, but we're still in that reversal now. Probably too low to sell. Better to sell around the 30 high. And for the bulls, they don't yet know if it's too early to buy. Not a strong looking buy setup, a doji bar and 2 big bear bars. So we may have to go sideways for a few bars, and we might get one more leg down, 27, 33, and who knows, 35. Did not quite get to yesterday's low. Decent bull bar, but because of the uncertainty, if you're buying above 33 or 34, I would not exit below 33. I would use a wide stop, because there probably will be buyers not far below 33. The market's deciding, is the wedge bull flag complete, beginning with 24, or was 25, 26 so strong that was the start? And this is now the second push, not the third push, and therefore we get one more push down. With 33 reversing up 1 tick above support, yesterday's low, the double top, you got to be thinking that we're probably going to go a little bit lower. So I think it's slightly more likely that we're going to get one more leg down. Last week we had that day where we broke below the range, above the range, below and above. So 4 breakouts, really unusual. And I still think not much chance of breaking below 18, below 19. With every bar that we add to the bear channel, the odds increase. But at this moment, I think only 20% chance we'll break below the 19 low of the day. So that means we'll either stay in a trading range, or the bulls will get a higher low, major trend reversal here after this lower low. I think most likely we're going to be sideways for the next hour or two. And 33 might be the low might be a little bit lower, and the high is probably around 30 high. For the bears, 5-tick trap, 34, double top lower high 30, but probably limit order market. Buyers maybe below 35, probably below 33. Stop order bears, I think too low to sell. Also selling below a pair of bull bars, low probability bet. So bulls want to buy somewhere either below 33, 34, or 35, 34, or 33. And bears, I would not take the stop order sell. Bears want to break below the wedge bottom, 33, and then measure move down to a new low of the day. Not likely. More likely, if we get below 33, there'll be buyers not far below, maybe 60-minute moving average. Remember, you had sell the closed bears 18, disappointed by this rally, and they're selling, trying to get the market back to that 18 close. I don't think they'll be successful. But a lot of times, 80% of the time, if you scale in, you can avoid a loss. So a bear might sell the 18 close and look for a decent stop entry sell, like below 25, and their average price is right here, which is yesterday's low. We did not get there, 33. So since 80% chance that those bears will avoid a loss, we're probably going at least a couple ticks below 33, which would be this pink line, yesterday's low. If I have this drawn in accurately, I don't know if I have it accurate, but it's fairly close to accurate. That would allow the bears to avoid loss. So they sell that close, sell more below 25. Their average entry price is right here, the midpoint of those two prices. And selling that close 18 is reasonable. That doesn't mean it's wise, it's reasonable. And if you do something reasonable and you scale in and use a wide stop, 80% of the time you can avoid a loss or make a profit. And therefore you have to bet we're going at least one tick below the average entry price, which means at least 2 ticks below 33. If you're one of those bears, now the market's letting you out break even right here, okay? It just fell below your average entry price. What are you going to do? Are you going to hold, hoping it gets down to the 18 low, 18 close? No, you're going to buy back your shorts. So we're probably going to bounce here. Those bears who sold the 16 close and sold more higher are probably relieved to be able to avoid a loss. So we'll probably get some little bounce here from them buying back their shorts. Now, you can argue it's a break below a wedge, and therefore we might fall for a measure move down. But I think more likely it's a trading range day, and we've had two pretty dominant rallies. So you got to bet that we're not going to fall to a new low of the day. Is it still 30% chance that we get new low, or is it higher? You know, I still think it's about 30%. It might be 40%. But if we keep getting bear bars, it becomes 60, 70, 80% chance that we'll get a new low. We're not at that point yet. So bears trying to get a break below the wedge bull flag, and then a measure move down, which would take us to a new low. And bulls are trying to get a reversal up from below 33. Should be some profit taking from the bears, the scale in bears. So we should bounce here. Bulls, consecutive bear bars, 36, 37. They will want a pretty strong bull bar to buy with the stop. We had that crazy day last week where we just kept getting repeated breakouts. I don't know if this is it. No, this was it. New high of the day, new low of the day, new high of the day, new low of the day, new high of the day, new low of the day. And the bears would like to do that today, but that was extremely unusual. And in part, the day started over with the 11 o'clock FOMC minutes announcement. Are we always in short? If this bar closes near its low, we probably are, but it's also a trading range day, and always in means less, because by the time it's always in short, it's usually about ready to reverse up, and by the time it's always in long, it's usually about ready to reverse down. Testing the 19 high, so a breakout test. The bulls bought aggressively at this price earlier today. You can see bar 2021, when it was at this price earlier today, it raced up, and we're testing that price again. But 36, 37, big enough bear bars, I think most bulls will want a micro double bottom, despite wedge 27, 33. In the buy zone, but surprise down 36, 37. So a lot of bulls, the stop order bulls, will wait for a second buy signal and not buy above 38. But I do think you'll get some of the scale in bears who are disappointed buying the 18 close, buying back their shorts. I said some bears would sell below 25. Some would sell below 22. There's their average entry price. So it's below the average entry price for both bears. We reverse up abruptly here and here, and we could do it again. We have a wedge 27, 33. but I would not buy above 38 unless you're willing to put a stop below 19. Double bottom pullback. So I think of that as a type of triangle, even though it does not look like a triangle at all. But it's 3 pushes down in a trading range. Double bottom pullback, 2 different pullbacks. Small double bottom pullback, rally. Bigger double bottom pullback, rally. Double bottom pullback. But the bulls need a better buy signal than 38 after 36, 37. Bull bar, but those 2 big bear bars, 36, 37, make it likely that the bulls will need a micro double bottom. So if you're buying above 39, you still probably need a stop below 19. And for the bears, they're hoping this is a bear channel that lasts all day. Not likely. So I would be looking to buy, but I would wait for a second buy. Limit order bulls, 33 low and lower, made money. Low on, the bears hope for a measuring gap, but probably buyers not too far down. Remember, the bears broke below a wedge and they're hoping for a measured move down, either from up here or from here. Limit order bulls, 38 low, need 1 more tick. They should make money. The bears got their objective, second leg down after 36, 37. Bulls have a micro double bottom, but a lot of bear bars, 36, 37, 38, and 40. So not a strong buy above 39. Limit order bulls made money below 38, below 39. They'll be less willing to buy with a stop above 39. Bears, I would get out above 39. We have a wedge, 1, 2, 3, and we have a micro double bottom, 60-minute moving average. For the bears, a low 2, possibly a bear IOI. But the odds right now, I said 30% chance new low. Maybe with this breakout, maybe 40% chance we get to a new low. That means 60% chance we do not get to a new low. 60% chance this is a bear leg in a trading range, and it will be followed by a bull leg. But still pretty strong selling, 36, 37. So we might have to go sideways more before stop order bulls will buy. Well, the bears double top here, flag 30, 35, lower high double top. Might get a measured move down here, but that's pretty far down. Right now, I still don't think we'll get that far down. What happens if we break below 19? Can we crash, collapse? I don't think so. A lot of times you get expanding triangles that just keep expanding. It keeps getting new highs, new lows, like that day last week. It kept getting bigger and bigger, expanding triangles, and it extended to the next day as well. Expanding triangle bottom down here. And a couple of days later, expanding triangle top up there. Trading range behavior. Bulls would like another bull bar for the buy, like 41, for example. First target, top of the most recent sell climax, which is up there. The bears have a low 2 short, but 2 very strong reversals up. So unlikely that we're going to go very far down. This is actually a nested double bottom pullback. We have a double bottom and a pullback, and within that pullback we have a double bottom and possibly a pullback 42. But the bulls need a reversal. They need a good bull bar 42. Bears low 2 bear flag. I would not take the short. And for the bulls, they would like to get a bull bar 42 for a buy. You can see markets deciding, can the bulls get a good buy signal bar? And the answer is no. For the bears, they have that low too short. I would not take the short. I was hoping to get a good buy signal bar 42. Some bulls still might take it. It's a nested double bottom pullback, so a small double bottom pullback. And this double bottom pullback is a pullback from a bigger double bottom pullback. Bulls would like to start getting bull bars closing on their highs. For the bears, what about selling below 43? I would not. And for the bulls, it looks like most of the bulls have bought above 42 scalped. However, I think we're probably going up to the 35 high area. We still have a gap, a body gap at least, a breakout point below this low. The lowest body is here, and we're testing that body right here. However, there's a tail. The bulls need to get, they got to close the body gap, so they got to get a close above the lowest body in this breakout point. So we broke below, here's a breakout, we broke below that low. The lowest body in the breakout point is 34's open, which is also 34's low. And for the bears, it's still a bear trend as long as they can keep gaps open. We overlapped the breakout point. We went above the 33 low, but we did not go above that 34 open. If you look at a line chart, there's still a gap here. Let me put up a line chart. Here's the breakout point, and here's the pullback. So there's still a gap on the line chart. The line chart is based on closes, not on highs and lows. So bulls really need to get a close above that red line. And if they get that, then the bear trend has ended, and then we're back to either a trading range or a bull trend. The bears double top 39, but a bull bar. We're still in a bear channel. I bought below 39 for a scalp. I bought around the close of 42 for a scalp. I'm not willing to swing trade long or short, and currently I'm flat. The bulls need to stop it. Theoretically, if it gets below 40, that's where the bulls have their stop. We could get another leg down. So you can see bulls buy 43 low, and they buy with a limit order, one tick above 40 low, trying to keep the market from falling below 40. For the bears, they want to run the stops. They want to get below 40. I would not sell below 40. It's too low in a trading range today. Limit order bulls, 43 low, made money. When I talk, a lot of times it's hard to trade, so I end up missing some trades. Stop order bulls trying to get another buy above 44. They would like to get a bull bar. 4 times the bears have tried to get below this price. Down, up, down, up, down, up, and down, up again. If the bears repeatedly try to do something and fail, they decide the price is too low. The market has to go higher to find sellers. So they stop selling at this price, and the market goes up. This is 4 attempts to break below this price, and the bears are discovering so far not enough sellers at this price. So they'll buy back their shorts and then look to sell at a higher price, like maybe up around here or here. Tight trading range, so bad for stop entries. Selling below 39, 41, 43. Buying above 38. 42 is a special case, the nested double bottom pullback. Now, will they buy above 44? They might. We're in the buy zone, a bear leg and a trading range day. The bulls did not get a good buy signal bar 42, but so far they're stopping the bears from running the stops below 40. So good for the bulls. So I don't know what to do with 44. I think you can buy for a swing. I would not buy for a scalp. You're right below the moving average and you're at the top of a tight trading range. So the alternative is you wait for a strong breakout. But trading range day, breakouts usually don't last long. Here, as big as the breakout was, it lasted 3 bars down, 4 bars up, 2 bars down. Trading range day. So not a good looking buy. So I'm going to wait. Are we always in long or short? I think it's more likely we're going to go up. We have a nested double bottom pullback, and the bears were unable to trigger the stop. Not a very good looking buy setup, but we're probably going up to the 36 high, top of the sell climax. Bulls trying to close the body gap. That would represent the end of the bear trend and the conversion into either a trading range or a bull trend. Bears trying to keep the gap open. I think we're probably going to close it. Looks like a trading range day. Bulls trying to close the gap. Remember, not bull trend. End of bear trend, end of bear channel usually converts into trading range. You can see it's paying attention to that red line. It's been spending a lot of time exactly at that red line. So the market is aware of that and close exactly at the red line, not above. But I think we're probably always in long. Everyone wants a big trend. It's not going to happen today. Today's a trading range day, so it goes up 2 or 3 bars and then does the opposite. So here, as big as this was, it's basically just 3 bars up, 4 bars up, and then the end of it. So the bears expanding triangle or wedge, 39.43, but 2 decent bull bars, and therefore probably buyers below 47. For the bears expanding triangle or wedge, breakout test 36 low. They're trying to keep the gap open, but probably buyers below 47 after these 2 bull bars. So I think the gap is going to close either with the current bar or with maybe the next bar. This is bar 47, bar 48, multiple of 12. It would correspond to a close on the 60-minute chart. For the bulls, a break above a bull flag and a pullback, but more 5-bar tight trading range and sellers somewhere above either a lower high or above yesterday's high, probably sellers. Bulls close the gap, so no longer an open body gap, probably buyers below. So click remove trend line and it removes some other trend line. Again, removed another trend line. It just removed another trend line. So it removed 3 trend lines before it removed the one that I wanted it to remove. 15-minute chart, who knows what trend lines it removed, but it removed several trend lines. We had this gap here, so maybe that gap. Open of the week, it removed the open of the week. I removed the close from 2 years ago. Another double bottom pullback. More likely buyers here than sellers. The bear's got to break below 44. The bear is trying to break below 44. You sell on a stop below 44. It's a trading range day, and some on stops below things is a low probability bet. Bull is trying to prevent the stops from getting hit below 44, and bear is trying to hit those stops. Bulls need a decent buy signal bar 50. What happens if we get below 44? Trading range day, probably buyers not far below. A low one, but fairly low in a trading range day, plus right above the support of the 44 low. So certainly not a scalp. And for me, I'm not willing to take the swing trade. I'd rather buy the reversal up or wait to see a strong breakout below 44 and then sell closes. Not a good stop entry buy 50 after 3 bear bars. For the bulls, it's still a double bottom pullback, double bottom 40, 44, pullback 49, but 3 bear bars. So best choice, wait. Breakout mode, the bears want the breakout below 44. Small double bottom, measure move down to the low of the day, and the bulls have a double bottom 44, 49. They want to break above the neckline 46 and then get up to the 35 high. Tight trading range. In general, probabilities are about the same. However, today has had 2 dramatic big reversals up, and I think that makes a bull breakout more likely than a bear breakout. Do I think we're going to go very far? No. And daily chart, today is a high one bull flag for tomorrow. But with Monday's reversal at really important resistance, there probably will be more sellers than buyers above today's high or above Monday's high. Just trying to get the breakout. There will be bears selling the 46 high. But we have a magnet at the top of that sell climax. This looks like a bull flag, a bull breakout, and a pullback. Not really good looking buys. Above 52, you got 3 bear bars. 54, you got a doji. So just because the odds are we're going up does not mean there's an easy way to get long. Can this be a late bull trap? Yep, definitely possible. Market's deciding, is the breakout going to be successful and get us up to here, or is the breakout going to fail and get us down below 44? Slightly more likely up. This looks like a bull trend, a bull flag, a breakout, a pullback. But as I said, not an easy way, no easy way to get long. So do the bears sell? It's a low 2, 53. It's a second leg up, first leg 47, second leg trap. But I still think with 2 very big reversals up, the odds are against the market going much lower. I don't know that it's going much higher, but I think the odds are it's not going to break below 44. If it does break below 44, can it get down to the low of the day? That would increase the chances that we get there, but I think the odds are that we're going to stay above the low of the day. I did buy during 55 and get out break even. It did not reach, it didn't go up high enough for me to scalp. Still always in long, still double bottom pullback, but not a lot of traders willing to buy high. And bears still making money selling with limit orders above 40, 43, 47. Right now I'm trapped out. Let's say we get an II 57. Can you buy above 57, sell below 56? That's stop orders, and this is a tight trading range for 20 bars, not a good stop order environment. I still think we're going to try to run back up to the high of the day. Two very strong rallies, very dramatic one here. So I still think it's basically a deep pullback type of day. Sometimes it takes hours to get back up there. Here it took several hours. Here, sold off for several hours, and then the final several bars, like 12:45 or so, it just raced up to the high of the day. There's less need to get up to the high of the day because the 22 close bulls have already been able to get out. That's what 25 is all about. The bulls who bought decided it's not going higher, so they sold out of their longs, and 25 allowed those bulls to get out. So there's less need to get back up here. So the bulls who bought, they've already gotten out. They don't have to buy more here to try to get it back up there. So the scale end bulls are no longer feeling pressure to buy more. You know, they've already exited. And what about the scale end bears 18 close? That reversal up is so big that I think we're not going to get there. The more that we go sideways, the more it becomes 50-50 that we'll break out below 44. And if we break below 44, then we might get to a new low of the day. I just think right now, maybe 30% chance we get a new low of the day, maybe 40%. It'll go up if we break below 44. II, which is a stop entry setup, but nobody wants to enter with stop orders. However, let's say we break below 57, trigger the II sell, and then reverse up 59 or 60, bulls might be willing to buy with a stop. And the opposite goes for the bears. If we break above the II and then reverse down, bears will be more willing to sell once there are trapped bulls. The most recent reasonable stop entry was above 51. So I still think it's slightly more bullish than bearish, but tight trading range. So here, the bulls are trying to get a reversal up after the II sell signal triggered, but it's not as obvious to buy above 58 because a lot of the bears who sold below 57 have their stop above the II, which is 56. So you have bears willing to sell 58, trying to prevent the market from hitting their stop above 56. Their stop is not above 58 or 57. So this is not as good a buy setup as it might appear to be. For me, when an II triggers by going below the low of the second bar, 57, the stop is not above the second bar, 57. It's above the highest bar of the II, the higher bar, which is 56. So if you sell below 57, your stop is above 56, the top of the II. There's again trying to break below 44. You can see the bulls who bought above 58 gave up, but it's still a tight trading range, and the math is not all that good for stop entry traders. The bears who sold below the II 56 have not made money. The bears who sold below 57 have a 1-point scalp. Testing the high of last week. Big tail, nothing to do, 20 bar tight trading range. Limit order bulls bought the 56 low and they made money. They bought the 56 low, 1 point lower, and if you were watching, it bounced 1 tick above the 56 low to let those bulls make their profit. Remember, today is an entry bar for the sell. Yesterday was a sell signal. reversal down from above 2,800 and the December crash. The bears would like to get 3 or more consecutive bear bars. They would love one huge bear bar, but they don't have it. They would love this or that, but they don't have it. So alternatively, they'd like to get 2, 3, 4 consecutive bear bars. And that makes the open of the day important. At the end of the day, the bears would like today to close below the open. Today is a buy signal bar for tomorrow, and therefore the bulls would like a bull body, and they would like the day to close near its high to be a higher probability buy signal bar on the daily chart. At this minute, this is so strong, so we'll probably get follow through buying tomorrow, and we'll probably get above this high. Obviously, that changes if we break below the low of 19 today. But if we just hold where we are, we have a double bottom and very strong rally. Odds are we're going to go back above this high tomorrow. And that would trigger the high 1 on the daily chart. Bulls 2 legs down, 56, 59. I think still always in long, but tight trading range, bad math for stop entries. If you buy above 60, you're taking a chance that we get up here or up here by the end of the day. The math is okay, but it's not great. If you wait for the breakout, it probably won't be much left to the trade, because look at this, breakout, and that was it, right? Trading range day. You don't get 5, 6, 7 bars in a row. You get 2 or 3 bars and then a reversal. So really not very good math. For our 60 multiple of 12, the close of another hour, you can see the hour has been small and sideways. We have 2 small sideways hours. 60-minute chart, it's still a bull flag. It looks like we have a breakout and a pullback. 5-minute chart looks like a bull flag as well. Bull flag, breakout, pullback, and then breakout again, pullback. Can you sell the close? Pretty good bull bar, trading range today. I sometimes do that. I'm not doing it here because I still think the odds are we're going to try to get up to these highs. Limit order bears selling highs. And bulls seeing it hesitate and scalping out. The bulls need to get other bulls to buy here, and buying above things, selling below things has not been a good strategy today. So traders are hesitant to buy too high. Bulls trying to get back above 2,800, which is this high, trying to get a buy the close finish. This is too early to make it to the end of the day, but as I said, the market's trying to get to the sell climax high, just about there, and 2,800 has been an important price over the past couple of years, or past year, especially over the past few days. Is it buy the close? Yeah, it's a strong enough breakout so that we'll probably get at least a small second leg out. Let me take a look at ticks. Ticks 700, so that's probably not the end of the move. If we pull back, we'll probably get a little bit more up. We have a gap here, so this might be a measured move up, a little bit higher, takes us to around 2,800. Can you sell the close 62? Arguing trading range day and then scale in higher. I would not. This is the best pair of bull bars since 21, and we have a target above, so we're probably going at least a little bit higher. At the important target, 2,800, and then the 30 high. Strong enough rally, the bears will probably need a micro double top. We had a strong rally 7, the bears needed a small double top. We had a strong rally 21, 22, the bears needed a double top. We have a strong rally here as well, and the bears will probably need a double top, and therefore not a lot of bears will sell below 63 and bulls will buy the market and buy pullbacks, betting that if they buy and it goes up, they can make a profit. If they buy and it goes down, they can buy more and it will get back up to their first price. If it gets back to their first price, they make a profit on their lower buy and they get out break even on their first buy. So bears double top 30, but good bull bar 61, 62. Not a very good sell below 63. I would wait for a micro double top to sell, and bulls probably will buy below 63. If 63 has a bear body, especially 3 or 4 tick bear body, I think bulls will get out below. If it has only a 1 tick bear body, some of the bulls will hold and some will buy more below. If it has a bull body, probably buyers below. Tick bear body, I don't think the bulls have to get out below 63. They can wait to see what 64 looks like. However, it's disappointing for the buy the close bull 62, and a lot of the bulls who wanted to buy below a bar will be hesitant to buy below a bear bar 63. So a lot of the bulls will wait for a bar or two to see what we get. And for the bears, I would not take the short. Probably buyers around the 63 low and a little bit lower. Ticks, a new high in ticks over here. Probably not the final high in price, but in a trading range day like today, I think ticks are less reliable. So that I'm less confident that we're going above this high in the E-mini. Trading range day, it's hard to get too many bars in a row in the same direction. In a trend day, traders would be excited about 62, 61, but it's really easy to end up buying too high or selling too low in a trading range day. By the time it looks extremely bullish, it's probably going to attract bulls taking profits, and the bull trend ends, and you don't get follow through buying. And the opposite is true with sell-offs. By the time you think it's very bearish, 17, 18, bears take profits and you get a reversal. I bought during 62, I think 62, maybe 61, but during, I think 62, and scalped and back to flat. If this was a bull trend day, buying above 64 would be okay. But because it's a trading range day, even though we've had several strong rallies, it's still a trading range day. I'm not willing to buy above the 64 high one. Micro double top, like 23, 25, I would get out of longs below. As for shorting, you can argue another failure at 2800, double top 30. You can argue wedge 46 on 55, but 61, 62 strong enough, so I'm not going to take a stop entry sell. Right now I'm trapped out, waiting to see if we get a pullback to the moving average and the 55 high. We know there are bears who sold the 55 high. They sold more 1 point higher, 2 points higher. They're trying to sell it down to 1 tick below the 55 high. That would allow them to break even on their first sell with a profit on their higher sells. The bulls know that, and they're going to buy just above the 55 high to try to trap those bears, and then the bears would have to buy back their shorts for a loss on a reversal back up from that test of the 55 high. It's still on the high one by 64, and I am flat. I did not take it. Bulls want a gap. You got a trading range and then a break above the range. We sold off at this price a couple times today. What do traders do? For the bears, it's a wedge now, 55, 63, a micro double top. But it's still, whatever that is, 8-bar bull micro channel. And the sell did not trigger below 63, so it's not a second sell signal. So for me, it's not a stop entry sell. Some bears might sell 63 high and scale in higher. Limit order bears, but stop order bears, I think the math is difficult. The bulls, they got their 6 ticks above 64 and we're pulling back. So that tells you a lot of the bulls scalp for 1 point. Just like they did above the 9 high 1 and the 24 high 1. 24, they were able to get 2 points, it looks like. Best choice, get out of longs below a bear bar 66. And selling, I would not do it. I would wait. Limit order selling, maybe, above things 63, 66. But stop order selling, 8 bar bull microchannel, always in long, I would not do that. Not a good top, but not particularly good for the bulls either. 61, 62, strong enough, might get 3 pushes up, 1 pullback, 2 pullback, 3. But we're in a price level where the market sold off many times earlier today, 2,800 and a little bit above. Bulls trying to get the day to close near its high to be another high 1 bull flag. We've had many of them. 1 here, here's a high 2, high 1 here, high 1, high 2, high 1, high 1, high 1, and the market just keeps going higher. What's different is we have a decent bear bar yesterday, and we're at 2,800 where the market has stalled, and the bulls have been unable to maintain a breakout above it. Last year in the summer, the bulls got above it, but we got drawn back below it in September, October. This is more about the daily chart than the 5-minute chart. The bulls are trying to get a good buy signal bar for tomorrow, a high 1 bull flag. They know that yesterday was a good bear bar, and the bulls are trying to come up with a good bull bar to erase the bearishness from yesterday. Bigger bar, 67, so a little bit of a climax. Third leg up, 63, 65. So you'll attract some bulls taking profits, but really not all that great for buy the close bulls. You don't want to see bear bars every 2 or 3 bars, and you also like to see bigger bull bars, or more of a series of bull bars. I don't like 63. I don't like 66. So I've missed this last piece. I did not buy above 64. And now we have 11 bar or 11 or 12 bar bull microchannel, and that makes the first reversal down not likely to go far, so not a good stop entry sell despite a parabolic wedge. So right now I'm trapped out. Buy the close, but I'm trapped out. We're at the top of a trading range day. Basically a big cup and handle. We have a sell up, a reversal up, and then a big pullback to a higher low. So we had a break below the bear channel, reversal up, first reversal minor, and then we had a lower low major trend reversal, and then this is a higher low major trend reversal. Remember I said I thought we would test the open of the week at some point before Friday. The bulls want a 10th consecutive bull bar on the weekly chart, and the sell-off is not all that strong. The open of the week is therefore an important magnet. The bulls want to get the week to close above it. So maybe tomorrow we'll test it again. And the bears want the week to be a bear bar on the weekly chart, and therefore they'll look to sell around the open of the week. High 1 buy 68, but parabolic wedge 1, pullback 2, pullback 3. So not a very good buy above 68, possibly sellers above. And for the bulls, right now, a 10 bar bull microchannel. So you think bulls would buy below a bar, but 68 is a bear bar, and it's a parabolic wedge at the top of a trading range day. So not a lot of bulls buying below 68, not a lot of bulls buying above 68. Bears might sell above, but their problem is we're in the final hour, and we have a microchannel, and they could easily run out of time. So we're in the sell zone, top of a trading range day, but 10 bar bull micro channel makes it, it lowers the probability for bear selling. I would not sell with a stop. Selling with a limit order above 68, above 67, I don't know if it's worth it, but that would be the only way I would sell. Parabolic wedge, double top, 25, decent bear bar, a 10 bar bull microchannel lowers the probability for shorting below 68. I did not take that short. So the bull's a high 169, but parabolic wedge, starting to get bear bars, top of a trading range day. I would not take that buy. So might be more sellers than buyers above 69, 68, 67. And the bulls probably want a couple legs sideways to down to around the moving average before they buy again. I won bull flag 69, but 2 bear bars, parabolic wedge, top of a trading range day, low probability buy. Probably sellers not far above, but we're in the final hour, and that makes it risky to sell a bull trend. Not good to sell a bull micro channel with limit orders this late in the day, because you can run out of time. It can keep drifting higher, drifting higher, drifting higher. You sell more, you sell more, sell more, and then the day closes up here, and you end up with a big loss. Just trying to get all the way back up to the open of the week. There's still a half hour left. It might get there. We may. This is a very strong rally, and bull flag. I don't think we'll get there today. I do think we'll get there maybe tomorrow, but I suspect there's not enough momentum up to get us there. Remember, we sold off to a new low of the day and reversed up abruptly. Here, we're going to a new high of the day, and we might do the same. I don't think we're going to go down very far, but there might be more sellers than buyers at the 25 high. It's still a trading range day despite this reasonably good rally. Limit order bears made money selling 25 high and selling 65 high, and the ones that sold the 69 high and 1 point higher just made money as well. So limit order bears are making money despite the rally. Bears trying to duplicate a micro double top, strong rally, second leg up, and bear bar. Strong rally, second leg up. They'd like to get a bear bar 69. I'm flat. If I were not flat, I would get out below 68, and I would not buy above 69, and I would not buy above 67. What about selling below 70? I don't know. It's a small pullback bull trend for over 10 bars, plus a bull body. Not good. More limit order trading. We know there are sellers above, and there might be buyers below 70. So, and not good to be trading with limit orders this late in the day. Starting to get bear bars, parabolic wedge buy climax, high of the day. I think it makes it difficult to do anything. With limit order bears starting to make money, stop order bulls are less willing to buy, like above 71. If you're a computer, no problem, but individual trader, this looks like the start of a tight trading range, limit order market, possibly sellers above and buyers below. That's the second sell signal, like 12 and like 25, but as you'd expect, there's something wrong with it. The momentum up is pretty good, and the bars are big, so the stop is pretty far above. So this is really not very good, not a very good sell. Also, how far down do you think it'll go when a bull channel is this tight? Probably not very far down. Might be sellers above 71, sellers 72. And buyers, I wouldn't buy the 71 low, but I suspect there'll be buyers not far below, certainly at the moving average. bears unable to get a bear bar, so that lowers the probability for stop entry traders below 71. So buyers below, maybe a point below, maybe at the moving average, and sellers above, but running out of time, so not not good for most traders to be trading with limit orders. Bulls, will they buy a 69 low? Computers will also buy the moving average, but individual traders, I think, are pretty much stuck here. They're not going to buy above 72. Most of the bears who sold below 71 have scalped because they do not expect this to sell off very far. Tight bull channel usually does not become a bear trend, usually becomes a trading range. I do think one of the problems the bears have is that the open of the week is a magnet, and we'll probably get there tomorrow. That will, I think, limit the extent of the selling today. For the bulls, double bottom 69, other computers double bottom 66. Test of the moving average. But reversing every couple bars here, so, and plus pretty big bear bar 72. Not enough time left for a swing, so really not a very good buy. Limit order traders, sure, they buy the 71 low, they buy more 1 point lower, they buy the 69 low. Stop order traders, I think, less good. Too many bear bars, too many bars with tails on top. So probably sellers not far above 72 or 73. So despite always in long, pull back to the moving average. And trend resumption, bull trend will break out higher low major trend reversal. This is becoming a tight trading range, not a good, I think not a very good stop. Limit order bears 72 high. Can we get all the way down to the open? Probably not. This is probably a spike pullback channel, 1, 2, 3, and we're in the support zone, beginning of the channel. I am flat. The bears sell the close, but I'm not selling it. It looks more like a pullback, testing the breakout of this trading range. And for the bulls, pretty tight bear channel, and late in the day, two decent bear bars, 74, 75. That makes it low probability buying 76. Earlier in the day, you could buy or sell and scale into increased probability. But this late in the day, there's not enough time to scale in. Another problem with this is it's already 3 bear bars in a row, and today we've had a hard time getting too many bull or bear bars. The bears got 5 bear bars here. That was it. This is the 4th. The bulls have 4 bull bars here, and then that was it. Bears trying to drive it all the way below the open of the day. They're trying to get a bear body on the daily chart. I am flat. Smart money, time of the day, right? This is when institutions are placing bets based upon what they think will happen tomorrow. So they're telling us that they're thinking tomorrow may be a down day also. Years ago, 30 years ago, 20 years ago, I sometimes would trade the smart money trade. So if it sells off at the end of the day, I would try to sell late in the day and hold overnight, hoping for a gap down. Over time, I concluded that it wasn't worth it. It was so much, basically a flip of the coin, that there's just too much stress and worry about it all night. And the opposite's true. If you get a rally into the close, buy the close, hoping for a gap up the next day. Here's the open, so we're almost there. And overall, pretty interesting day. There are several things that I think are interesting. Weekly chart, we gapped up, we closed the gap, we went above the December sell climax high and above 2,800. The market raced above it here, couldn't get above it here, could not here, succeeded here, but collapsed below it. Repeatedly tried to get above it, could not, collapsed below it, now drawn back to it. So for some reason, the market thinks 2,800 is an important price. This is the weekly chart. We now have 9 consecutive weeks with bull bodies. If this week has a bull body, it'll be the 10th. And I've only found one time in the past 20 years where there were more than 9. And therefore, we have to assume this week we'll have a bear body. And when there have been 8 or 9 bull bars and then a bear bar, most of the time there was a pullback for 2 to 3 weeks, sideways or down. So this is probably the start of a 2 to 3 week pullback. It could be more, but the past examples, it was mostly 2 to 3 weeks of sideways trading. It's still possible that we get an outside down week, that we go below last week's low. We gapped above it, we're reversing down, and last week is not all that big. Daily chart, very tight bull channel, so very strongly bullish, unlikely to become a bear trend without first going sideways. And that's why I say we may do this over the next week or so, stop going up, and then at that point the bears can try to make it go down. If we go down, are we going to get all the way down to these lows? Probably not. The first reversal down, maybe we'll get to this low, moving average. Certainly that low, that's an obvious target here or here. We have a breakout above this bar, so I can see it's coming back here. But I doubt we'll get much lower. 60-minute chart, different ways to draw wedges. Here are a couple ways, 1, 2, 3, 1, 2, 3. First leg down, we have a double top, lower high, major trend reversal. Bears want a second leg down from the wedge. My general guideline when there's a wedge is I expect 2 legs sideways to down, and I expect the total number of bars in the reversal down to be about half as many as the number of bars in the wedge itself. So if the wedge is, pick a number, 100 bars, then the pullback would probably be 50 bars and take us down to that low, this low, that low, somewhere in here. 50 bars, I don't know if this is 100 bars, maybe it is, but 50 bars, 7 bars to the day, that would be 7 days. So, but I think we'll probably get more like 10 days. 5-minute chart, we knew one obvious thing coming in. Yesterday was the bull channel. Yesterday was a bear channel. It's a bull flag, and 75% chance we were going to break above it either today or tomorrow. And when we gapped below the channel, I thought the odds were we would reverse up because 75% of bear breakouts below bear channels reverse within about 5 bars. So chances are we were going to get back into the channel and get up to the top of the channel, which we did. Tight channel, first reversal up, probably minor. Surprisingly big bar, 7, but terrible follow through 8, and then double top 12, another sell 15. I said that when you get these dramatic features, dominant features of the day, sometimes you get a sell-off that goes below the low of the dominant feature. And it's simply a bull flag that goes below the bottom of the bull trend, and that's what we had, 19. It's also a lower low major trend reversal after this first minor reversal. Then we got an even stronger dominant feature of the day up to 22. That made it unlikely that we were going to fall below 18. We sold off for a lot of bars, but even here, I said the probability of a new low was maybe only 30%, maybe 40%. The odds were we would either stay sideways or go up. We eventually, I thought it was interesting that we kept getting double bottom pullbacks. We have a double bottom and a pullback. Not a good buy signal bar until here. It's also a higher low major trend reversal after a lower low major trend reversal. We have a reversal up and a pullback, so it's also a cup and handle buy setup. Here's the buy above the bull bar here, here, or here. And within this double bottom pullback, there were several or two other double bottom pullbacks, 2 or 3 depending on how you look at it. We have a double bottom here and a pullback here, and we sold off 44, but it could not fall below the double bottom. That created a bigger double bottom, 40, 44 breakout, and another double bottom pullback here. And then we have a double bottom 44, 49, and another pullback here. So we had a series of double bottom pullbacks, higher lows. The sell-offs were deep. They retraced almost the entire prior rally, but we kept getting higher lows, and eventually we broke to the upside. First stop order trade, I said bar 5 was a second reversal up from below yesterday's low, and it closed near its high. So a good candidate for the low of the day, certainly for a swing up, so a reasonable buy. And then you got a high one above 9, but it's a doji, and you have that big bear bar 8. So yes, a second leg up is likely, but it may not go up very far. The bears have a double top with 8 and 12. However, it's also only a low 1. We did not go below 8, so it's less reliable. The bulls have a double bottom with 8 and 13 and a decent bull bar, but for me, it's still on the sell below 12, and that makes it a lower probability buy. The bears got another sell below 15 and then 16. Then we collapse down to the low of the day. So what do you do with stops up here? I would get out of longs below 12, and bears I would wait for a second entry sell below 15 or 16. And up here, what do the bulls do? Do they have to get long again to go above 13? No, but if they're trading always in, they've got to be thinking about someone to get long. Maybe if we get a second buy signal, 16, we did not. Maybe if we break above 12, they buy up there. I don't know. Those 2 big bear bars, I don't know. 12 is also a wedge, 3 highs, 2, 8, and 12. It was possible that it was going to be the high of the day, but that dominant feature, a surprise bar that is especially big, 7, made it unlikely that that we were going to get a bear trend. Next stop entry buy 17, probably a minor reversal. We have 5 bear bars, 2 of them pretty big. However, it could simply be a pullback from the surprise bar, the dominant feature, even though it's below the bottom of the dominant feature. So it's a possible low of the day. 20, we're probably always in long, so bulls will buy above 20. 21, now we got 3 bull bars, even more impressive than this. And this is probably a lower low major trend reversal. With the 5 bear bars, you got to bet that it's minor and that we're going to pull back. And then the bulls were disappointed by 23, and then especially 25. They gave up after 25. So stop entry bulls, some buy above 19, and then others buy above 20 or 21. Disappointed 23. You could buy above 24, but it might be a small second leg up, which it was, 25. And bears betting on a trading range day sold below 25. Bulls, it's a wedge with 34. You got 3 pushes down, 20, 23, 26, and 33. You got a bull bar, but you got 4 bear bars here, so not a strong buy. And the bears got 1 more leg down. They got a surprise bar down below 37, so you expect a second leg down, which we got 38, 40. For the bulls, I did not buy above 34, but I think it was okay. If you did, it's probably either better to get it out below 36 or use a wide stop and look to buy more on a reversal back up, like above 51. So not a good buy above 34. For the bears, double top bear flag 30, 35. But this is the dominant, or really, it's one of those dominant features of the day that you get once a week or so. The odds are we're not going to a new low, and therefore selling below 36, probably you're not going to go down very far. Limit order trading in here, double bottom pullback 42, and again 44 you could buy, but why the bear bars? 51 you could buy as well, but why 3 bear bars? Not all that good. It is a reasonable swing buy above 53, 51, and then 60, that would be the other buy. 2 legs down, 56 and 59. So through here, not great selling below 36, not great selling below 48, and none of these are good sells. And for the bulls, not great buying. Maybe above 51, maybe above 52. Stop below maybe 44, and then maybe above 60, and then definitely above 61, 62. 64, high one, but bear bar, middle of a trading range day, near the high of a trading range day, not good. For the bears, 68, parabolic wedge, 63, 65, double top, 25, but 10 bar bull micro channel. Bears need a second sell, which they got below 71, but 2 bull bars, not great. Below 72, a better sell signal bar, but more likely will stay sideways after a 10 bar bull micro channel. And then bears, they started selling either below 74 or 75. So 74, 75, 76, sell the close, but we're right above the 60-minute moving average, and we may have a hard time going below it. And got another 4 minutes left of the day. Here's the open of the day, and you can see we're just at the open of the day. The bears are trying to get the close below the open to have 2 consecutive bear bars on the daily chart. We have 3 more minutes before we find out. Buy the close, sell the close. 5 and 6 probably buy the close simply because 5 looks so good and the context was so good. A bear breakout below a bear channel, a bear breakout below the 60-minute moving average, second reversal up below yesterday's low. Yesterday, not all that bearish. It was a bear channel, bull flag, so we're probably going higher. So, but always in long on 6, 7 by the close. We're right at the top of the channel. That's the target for the bulls. If you do buy the close, you got to make quick decisions. And then you see 8. A lot of the bulls are disappointed, and they get out break even on these tails here, 10, 11, 12. So buy the close maybe, but disappointment, you get out break even. 16 is a sell the close. I don't know. If it goes below 16 and 8, we'll probably go a little bit lower, but not a lot lower. Is 17, sell the close. We're right at the 60-minute moving average. And we have a dominant feature of the day today, bar 7. And therefore, there probably are buyers not far below 5. So selling below 17 or 18 is not good. We broke below the 18 bar range on 19. Reversed up. Probably buy the close 20, 21. 22, we got a tail, and we're getting near what I said was a target at the top of this parabolic channel. So not great by the close 22. And then here, we just kept alternating every few bars. Consecutive bear bars 35, 36, 37, might go a little bit lower, not good. Probably buy the close 62, but then a weak rally. And then for the bears, sell the close, consecutive bear bars 75, 76, but we may stall at the moving average and last week's high, so not very good. Limit order traders, bar 1, probably sellers above a bear bar and a bear trend. And bar 3, I thought buyers below 3 and below 2, did not go below 2. Bar 6, probably buyers below. We just triggered a buy above 5, possible low of the day. And then up here, I think disappointing for the bulls. What is that, a 5, 6 bar bull micro channel. I'm not buying below a big bear bar here. Might be more sellers than buyers above 14. I would not take that sell. Maybe the easiest limit order trade of the day, buying the 22 low. Very strong rally, probably at least a small second leg up. 3 bars down, 27. Surprisingly big reversal, 25, 26. Probably sellers above 27 for a couple legs sideways to down. Then here, a low one, 39, buyers below. And then here, same thing, a lower high, 53, but bottom of the trading range, and we're probably going higher. So probably buyers below 53, buyers below 57. Up here, probably sellers above 69, 68, and 70. Sellers above 72. And then you had all the prior highs and lows. They bought the 4 low, they sold the 8 high, they sold the 12 high, they sold the 22 high. They bought the 24 low, the 27 low, the 32 low, the 38 low. They sold the 46 high, they sold the 55 high, but they got trapped. They could have sold more higher, it would have been okay, but with the consecutive bull bars 61, 62. Had I sold that 55 high, I would have gotten out on the close of 62. And then on the way down, I would not be buying with limit orders that late in the day. You can see where we closed. Here's the open of the day, and we closed exactly at the open. It's really funny. We closed exactly at the open of the day. Sorry about my voice. I still have a cold. So not much information on the day, other than it's not a good-looking high one bull flag for tomorrow. I think yesterday is the end of the buy climax. We may go a little bit higher, but I think yesterday was the start of a pullback. Sometimes the first bar of the pullback is not the final bar of the rally, so we can still go a little bit above yesterday's high. Sorry about my voice. It's just totally worn out. I don't know if I have a cold, or if I have allergies, or if it's just tired at the end of the night. Could you please point out the best trades for beginners today? The single best one was above 5. And then the second one was probably above 20, not above 19. And then third best was probably, well, if you want, you could sell below 25, but it's probably going to be a minor reversal and a higher low. And then I would say above 61. And those would be, I think, the best ones. Question, do you think your medical training observing patients made you a better observer of markets? No, I think it was probably the other way around. I was always very observant. I was always very curious, and that made me a better doctor. But I don't think there was anything in medicine that I learned that made me a better trader. I think, if anything, it made it more difficult to be a good trader, because in medicine you're trying to do the right thing, and you're trying to do a consensus type of thing. And in trading, you're trying to fight the consensus. If everybody's buying, you got to think it's not going to go up much higher. So I think, if anything, medicine teaches you to buy high in trading range, betting that the momentum up will continue, betting that a trend will continue. And if the market's selling off, it teaches you to sell low, even in a trading range, betting that the trend will continue. So I think, if anything, medicine is kind of a bad thing for becoming a trader. It takes a long time to get rid of the habits. Another thing in medicine is you're trained to be hopeful. You always want good results for patients. That's bad as a trader. If you're hopeful, if you're hopeful this is a trend, you're going to get killed. If you're hopeful this is a trend, you're going to get killed. If you're hopeful this is a trend, you're going to get killed. It's better to just kind of be stupid. If the market's going down, you say, oh, I'm going to sell. If it starts to go up, you say, oh, I'm going to buy. And don't try to think, oh, why is it doing that? It should not be doing that. You just look at it and say, oh, that's what it's doing. I don't care why, but I'm going to do what it's doing. Question, in a pullback to the moving average, when should one buy a high 2 and a high 3? In buying a high 2, I'm always worried about another leg down. It depends on what the first leg down looks like. So, for example, 25, 26, do you want to buy a high 1? Probably not. We're going to probably get at least one more leg down, surprise bar 26. And then here we got a second leg down, 33, but you got 4 bear bars, or 4 bars without a bull body. And that makes 34 a low probability buy. Also, this first leg down is strong enough so that we might get 3 legs down. So I would be hesitant buying above 34. If I did, I'd put a stop below 19 and look to buy more lower. And if I stayed long after seeing 36, 37, I'd just wait for a bull bar and buy more above 51, 60, or 61. So it depends on what that first leg down looks like. Sometimes you get an unimpressive first leg down, but then a very impressive second leg down, a new spike. And then you're going to be thinking you might get a third or fourth leg down. Anytime you get some kind of a surprise down, 36, 37, you're probably going to get at least a small second leg, 40. Anytime you get a surprise up on 21, 22, you're probably going to get a second leg up, 25. Surprise up 7, you're probably going to get a second leg up, 11. Question, I had a hard time going long today because I had the Russell small cap up. Do you recommend only watching an E-mini if that's what you're trading? Yeah, absolutely. I think it's really easy. You can get paralysis through analysis. If you're watching too many things, even watching 2 time frames, a 1 minute chart, a 5 minute chart, a 5, a 15, a 15, a 60, you're regularly going to see opposite things going on. If you look at the NASDAQ, sometimes it'll be going down, the E-mini is going up, or the Russell could be going up and the E-mini is going down. If you're a day trader, if you're trading on the daily charts or weekly charts, fine. You can look at lots of charts. You have lots of time. But if you're a day trader, you got to make quick decisions, and every chart has more than enough information to make good decisions. And I think it's much better to focus on the information on the one chart in front of you and trade that, and not try to reconcile it with what's going on with other charts, other time frames, other markets, because all you're going to do is get messed up. You'll make mistakes. You'll talk yourself out of taking good trades. You'll talk yourself into taking bad trades, and you'll lose money. So I would just pick one chart and get reasonably comfortable reading it and not worry about everything else. This is what I look at. This is what I trade on. This is what I do. I could put up a 1 minute chart, a 2 minute chart, and say, oh, I can enter earlier, or I can use a tighter stop. I'm going to lose money. I'm going to make more money just trading this one chart and trading it appropriately. By the close of 21, we're not going down here. And therefore, you can buy for any reason, buy more lower, and it's going to come back up here later in the day. You know that, because that's what the market typically does when you have such a dominant feature, especially a second dominant feature of the day. And you can put up all these other charts, the Russell, the NASDAQ, different time frames, and all they can do is make you do stupid things. By the close of 21, you've seen the low of the day. You just know it, like 90%, maybe higher, that you've seen the low of the day. And therefore, you can buy pullbacks and scale in and know that the odds are 80% or better that you're going to make money. So, you don't need other charts because all they will do is make you do stupid things. They'll make you, you'll get paralyzed from analysis paralysis, too much information. And all it is a crutch. Everybody's looking for a savior. Everyone wants some strong, everyone wants a dad or a mom to take care of them. But as a trader, that's not the way it is. It's eat what you kill. You are responsible. And the more you look for outside forces to save you, experts, me, indicators, multiple time frames, newsletters, all that other stuff, TV, the harder it's going to be to make money. I'm trying to teach traders how to read charts and how to trade. And, you got to get confident that you can read the charts. And for me, I see something every bar, every second I see something. I see a reason to buy, I see a reason to sell. I weigh them out. Can I structure a buy? Can I structure a good sell? Can I manage it properly? And if the answer is yes, I take the trade. And you don't have to see 10% of what I see or 10% what I talk about. All you have to do is look for some things and just take the trades. Bar 5, I talk about that all the time. The second entry failed breakout yesterday's low. And a good buy signal bar, you just buy it. Even if you scalp out for 2 points or 4 points, it's a very profitable strategy. So, there's enough here that you just keep awake, stay focused, and don't think about anything other than what's in front of you. And I think that is your best approach. That's what you should be doing. All right, I'm losing my voice. Next several weeks, I think, will be really interesting. Typically, you can divide the year up into 2-month blocks: January, February, March, April, May, like that. And historically, the best 2-month block is March, April. So we're entering what typically is the strongest block. However, it's following the strongest January, February in decades, or certainly in many, many years. And therefore, the March, April paradigm, people betting March, April going up, it might be an opposite thing this year because we were so overbought from January, February. And this is historically overbought. I don't think you're ever going to, you can look back, I don't think there's ever been a rally on the weekly chart as strong as this. Yes, there was one rally that lasted 10 weeks or 11 weeks, 10 weeks, but it was not as strong as this. So just like on the daily chart over here, back in December, on December 24th, I said, we've never had 10 consecutive bear bars in the history of the stock market. Therefore, I'm buying calls. Sometimes if something is so unusual that it's never happened before or it rarely happens, you got to bet it's going to stop happening and the market will undo the extreme condition. And that's where we are in the weekly chart. All right. Hope everybody has a good night.